I'm Olivia Vosnenko.
I'm Steve Guilfoyle.
This is Notorious Pink Rose, and this is
Street Smart.
That's right. Steven, welcome to the Navesink River.
Oh my gosh, I'm so excited to be in New Jersey at the tail end of an exciting week.
Is this gorgeous? I mean, we have been counting down the days for this summer special Street Smarts.
Sure.
What?
I was going to say, sure enough, and our old friend Danny Ryan.
Oh, listen to this story, okay? Do you have a minute? I think you do. I wanted to do this Street Smarts on a boat, and I thought of my favorite wine, which is Notorious Pink. So I contacted the company, and they never got back to me. So I was talking to one of the guys on the floor, and I was like, man, I want to do this rosé. It's my favorite. It's Notorious Pink. And it was Mikey P. And Mikey P was like, you know Dan Ryan right over there, the trader? Yeah, that's it. He invested in that company. I was like, stop. Are you serious? So I went over to Dan Ryan. I said, I would love to feature your wine. And now here we are, drinking on a boat, doing Street Smarts with my favorite rosé.
You want to know another funny story about Danny Ryan?
Yeah, what?
We went to the same high school.
Stop.
I'm older. We didn't go at the same time.
Wait, are you serious?
And so did our Modern Wall Street owner, Jimmy Sweeney. What? All of us went to the same high school.
Look at that, except me.
St. Francis Prep and Queens gang.
So I'm sorry, I'm from New Jersey, but at least I can offer you this. So thank you, Danny Ryan, for the beautiful vino. Thank you, Steven, for coming out here in the crew to talk some stocks on a boat.
Oh yeah, I gotta have my drink to.
So, cheers.
There you go.
What do you think? It's good, right?
This is impressive stuff there, Dan.
I know, it's so good. It's my favorite. It's like crispy. All right, now to the business.
All right.
Literally, we had such an eventful week.
When I look forward to this week ahead of time, because I do that
God.
as an economist and as a trader, I almost said, okay, there's not that much going on that week. Maybe that would be a vacation week. And as you can tell by the volumes, a lot of people thought the same thing. They made their plans and the volumes have been light. But there's been so much news, from the realm of politics, from the realm of trade negotiations, from the realm of central banking, from the realm of earnings, that you really could, if you stay within a range, almost trade this week effectively and come out of it with no position.
Exactly. I mean, let's see, the optimism around the negotiations with China that helped support us earlier this
Mexico.
week. And Mexico.
That's a
Everyone
big
always
deal.
forgets Mexico. They're right there, okay? They're right on our border.
I think they're very close to a deal with Mexico, and if they do put together half of a NAFTA with Mexico, then I think that leaves Canada out in the cold, and Canada will have to get involved, probably at a discount to where they would have been.
Yeah, but forget countries. Then there was the political turmoil with Cohen, with who's the guy?
Manafort.
Manafort with Munster cheese.
Pretty much stoically took it on the chin and 8 guilty counts on 18 charges.
Yeah.
Cohen, who implicated the president, it was a really big deal for a couple of days. It still is a big deal politically, but from a market perspective, probably not so much. Even if he were to face some kind of impeachment proceedings, I don't think that a President Pence would really change the ball all that much. He probably would lend stability to the office. So it's not a game changer. And you still need the Democrats to take both houses of Congress decisively for it even to be an issue.
Well, you know what? It wasn't the best week, I'd say, for Washington, but it was a really good week. And week prior for retail, man. Kicking booty. What is that?
It's really, it's earnings
on
in
all
general.
angles, yeah. Okay,
earnings in general for the whole second quarter, we're talking about 24-25% growth. We're talking about revenue growth above 9.5%, outstanding numbers. We're talking about a third and a fourth quarter that probably is going to see earnings growth above 20% for both quarters. So you're probably in the clear if we can get our other ducks in a row for a nice Santa Claus rally towards the end of the year, even though we have already had something of a nice year.
It's weird to talk about Santa Claus when we're out in like 90-degree weather right now.
It's only 4 months away.
All right, so let's talk about, retail sales out of the park.
Without really that much help from the auto sector. So you had significant actual retail purchasing in stores. Almost every retailer.
That's what it is.
Same store sales.
Same store sales. I thought it was now all e-commerce. I thought that, the brick and mortar was dead.
No.
I guess not.
Well, you know what? The American consumer, if you'll recall, used to be 70% of this economy. I guess it still is, but in better times. And it's been 10 years since there were better times. Now, we haven't seen wage growth. Inflation's running, 2.9% year over year. Wage growth's only running about 2.7% year over year. So the American worker isn't being paid more, but at least in the red states, they're experiencing a tax cut.
And
There's higher disposable income. Actually, the Fed tracks that. There is significantly higher disposable income for the average American right now.
That already came into effect.
Right. You live in New Jersey. I live in New York, so we're not feeling it.
So we don't have retail tax.
But in a lot of states, they are feeling it.
Really, that's really what it is.
And Americans are resorting to their old tradition of going shopping.
And where are they shopping, Stephen?
Oh my gosh!
I'll
got a
tell
nice
you where
list for
I'm
you.
shopping.
Where are you shopping?
Oh my! Well, where do you want to go first? Because do you want to cover like who are you covering?
I got a question to ask you.
Yeah, sure.
What do Walmart, Target, Home Depot, Lowe's, TJ Maxx, Kohl's Stores, Nordstrom, Macy's, Urban Outfitters, even Limited Brands, and Williams-Sonoma all have in common?
They had a higher quarter and they had higher same-store sales.
Well, yes, but they all beat expectations for earnings per share and for revenue, every one of them. And it's probably a ton like Estee Lauder just comes to mind that I'm not even thinking of.
Estee Lauder, you know, I couldn't believe it. They did. They totally killed it. I didn't realize that they own so many products like Glam Glow. They are really, I think the reason that they're killing it is they're going with the trend. They're following vloggers, they're giving their product out, they're all about like, you know, celebrity-based, video-based, all that kind of stuff.
I have no idea what Glam Glow is.
Oh my God, Glam Glow! It's like it's a company that does. Actually, I used it today. That does. You know, they really connect with people that's on Instagram, and it's a big social media company.
See, when you said that, I was thinking like cosmetics.
Well, it is kind of cosmetics, but it's more, you know, facial cleansers and masks and stuff like that. Who cares what it is? They can sell anything. What it is, it's about connecting with those social media stars.
Right.
They've really hit it at the and apparently airline stores.
Really?
Yeah.
Oh, because there's no duty. There's no.
They've really.
Right.
I mean, they've projected their brand in there, and they've been doing really
so
well.
They found a spot.
They did. Yeah.
Let me ask you a question.
Sure.
Walmart or Target?
Target.
I'm long Walmart, but that's fine because you know why? They both have impressive same-store sales. They're both experiencing significant e-tailing. Walmart 40% growth, Target 41% growth on the e-tail side, on digital commerce. So a lot of these firms are seeing, although they're not quite, they're nowhere near the level of an Amazon, they're learning to become competitive in the space. And that's so important. If they can become what used to be called omni-channel, firms like Target, firms like Walmart will not only thrive, but they'll move forward, they'll form alliances with firms like Google, they'll make cloud partnerships where they have to, and they will learn to, in the era of the Amazon, which I'm also long.
Yes, of course.
Coexist and maybe even profit nicely.
So Walmart was kind of the guy beating up the bully or trying to stand up to the bully, Amazon being the bully, the disruptor. So now are you saying that it's not just Walmart, it's all retail?
I think so. I mean, Target was the one that those of us who follow the industry used to make fun of. And they really, they've been impressive. It's really a turnaround story.
Target smells weird. It always smells like their pizza they serve. What is that?
Can
you guys change that? Because like, okay, anyway, go ahead.
But I think they both raised their numbers for the coming year.
Okay.
For earnings per share. Let me ask you another question.
Sure.
Home Depot or Lowe's?
Home Depot.
Me too. I'm also along that
I
one.
love Home Depot.
But you know, like Target, Lowe's is another successful turnaround story.
I always thought I would marry into the Home Depot family.
And
I was hoping that.
well, I guess that would be nice.
It'd be good. You know, he'd be handy, right?
Would he be handsome?
He'd be handy,
Okay.
probably handsome, I'm guessing. Anyway.
Well, anyway, unlike the others, Lowe's didn't really raise their numbers for the year, except for cash flow, which means they must have their margins under control. Although we do see some margin pressures for that group, they must have that under control to be able to feel like they can raise the full year cash flow numbers.
Okay, high five. Stephen, okay, you're talking like, you know, building and materials and all that kind of stuff. Can
Where you wanna
I
go?
offer some information on Coach, well, no, now it's Tapestry. Tapestry.
Okay, that's something I don't know that much about, so you go for it.
So they tried to Coach tried to reinvent themselves.
Right.
How have they been doing, by the way? How are their fundies? Do you follow?
I don't have them on the piece of paper.
Because they did okay recently because unfortunately with the event with Kate Spade, there was a lot of brand recognition with that, you know, a lot of publicity, and that's why people started buying up Kate Spade. But, you know, Coach tried to rebrand themselves from being basic, which was like the worst thing ever. That's like the Michael Kors. Like they just had all the same looking bags and like they'd end up in the on sale section. And yeah, I don't know. I just don't know where that
Did they
company
change
is
the name
going.
of the firm to get away from the Coach stereotype?
But why would you do Tapestry? That sounds like, that is so, I don't understand that. That sounds even more basic than Coach. Really,
Well,
I don't know. I don't know what they're trying to
well,
do.
you know, as we've seen, luxury, like all retail, is improving. But luxury didn't suffer with everyone else the whole time. Throughout the whole era of quantitative easing, the last 10 years, the Obama era, the top 1% did well every single year.
So the consumer will continue to buy. They're buying luxury. I mean,
Unless this is
Williams-Sonoma you're talking about.
Oh, Williams-Sonoma. How exciting is Williams-Sonoma?
Oh, it's so exciting.
Of
Especially once I'm all clad, you know what I'm talking about.
53% of all their sales are online. All right, they had 4.6% improvement in same-store sales. But any firm in this modern era that can improve their numbers using mostly online sales means they can lower their margins, which means that's a successful firm. Now, Sonoma, they ran like crazy since the numbers came out, so you can't buy it right now, or you shouldn't buy it. I don't like the chase equities that are running, but I promise you this week in the recon, I'll figure out where you can sell some puts and get yourself some long-side exposure.
You're always there for us, and thank you for that. My last question, though, is, listen, I want to trade some of these names, but retail, they will chastise you. The stock will chastise you without reporting bad numbers. Like they could be very temperamental stocks, even if they're okay. So how do you go about that?
All right.
Talk to me, Guilfoyle. Talk to me, Goose.
There are two retailers coming out with numbers in the next week. That if you miss this move in retail, because retail is outperforming right now the broader market, if you miss this move in retail, on Tuesday you have Best Buy, and on Friday you have Lululemon.
Okay.
All right, now these are names they've already run. Lululemon's up from like maybe 100 to like 137-ish.
Yeah, it sure did.
It
literally ran.
In the last few months. So
shorts.
you can't get involved and go there just yet, because you probably, when a stock runs into earnings, I find that there's usually a backlash as profit takers, even if the earnings are positive.
Okay.
So what I did this morning
Yeah.
was I sold the 120 August 31st puts for Lululemon. I sold them for like $1.04. Now, 120 is a long way off, $17 lower, but you know it wasn't there that long ago. So if the stock runs, okay, I pocket $104. If the stock comes in, my net cost is going to be $119, which I think that'll be fine for Lululemon going forward.
Yeah, sure, absolutely.
All right, now Best Buy, they bought this firm called, if I can find it, we're shaking a little bit.
Look at they're partying over there, man. Look at those guys.
All right, Best Buy is diversifying.
You guys had to go to Best Buy, apparently.
This week, Best Buy out of the firm called Great Call. They acquired Great Call for $800 million in cash.
What is that?
Which they bought it for so long. This is basically a health and emergency response.
Wait, what? Best Buy and
services firm for the aging. All right. Now you think of Best Buy as a large box retailer, but apparently they, even though they're probably going to report good numbers for this quarter, they're diversifying so that if there is another Amazon effect, if there is a downturn, if this discretionary income that people are experiencing is short-lived, they have someplace to go, and we have an aging population. Sure. So this actually works out for the better. For Best Buy, I am looking at this. I am long the shares, by the way. Okay. But I'm looking at the $78 August 31st puts. They're going for about 76 cents right now. And the $80 August 31st puts, they're going for about $1.52.
Okay.
So this will, like with the Lululemon, this allows you to experience if there is a sell-off on the earnings. This allows you to buy at a discount, minus your net basis will be minus the premium you took in on the sale. And if it takes off, you pocket the money from the sale of the puts.
Exactly.
So,
I like that. I like your plan
That's what happened to me in Apple, okay? Now, Apple, I was afraid going into the earnings, even though Apple has been killing it. But Apple, I sold a series of cascading puts going into the earnings. Now, I didn't expose myself to the risk in the equity. The equity took off. Now, people who own the shares did better. But because I took a limited risk approach, I still made out. I still profited kind of nicely on those moves.
That's what I'm trying to ask you. Like, I like limited risk. Okay, people, we need this.
Yeah. No, this is. I mean, this is how professionals, or at least how this professional builds a portfolio. Because you're basically always adding to your cash position through the sales of these puts. Once in a while, you get tagged and you have to eat the shares. All right, but you have already decided where you wanted to buy the shares by looking at a chart.
Well, guys, you know what? When you have to eat the shares, I'd say you should drink some rosé. Rosé all day. Steven?
What's the name of this wine again, for Danny's sake?
Notorious Pink. It's Notorious. Guys, thank you for joining us on the Navesink, on a boat, talking stocks, talking markets. I mean, this is a dream. I absolutely love it. Steven, thank you for coming out here to Jersey.
The pleasure is mine.
And we'll see you on the next Street Smarts. Cheers, guys.